What's up? Welcome back to another stock review, and today we'll be looking at the Vita Coco Company Incorporations, which is also one of its stock in Russell 2000 as well as Nasdaq. So this company is actually a beverage company, so without further ado, let's get right into it. So looking at the chart today, we have a very decent value of uptrend and also starting to form a 2000 EMA on the weekly chart. However, the stocks right now is actually close to the all-time high. And I do think that the company itself right now showing an increasing price in terms of their share company is actually a good starting, knowing that the company is actually in a value whereby the people are willing to pay more and increase in the long run. But in order to further evaluate them, let's look at their financial status and so on and so forth. So over here, we have the Vita Coco revenue. And since it's actually a quite new company that is back in 2021, so it's just a very short data. And for their recent revenue, it's actually in a very decent increasing form, at least a very stable revenue in over 4 to 5 years. As for their net income of this company, is that this company also has a very decent returns as well as profitability, being able to profits from what they are doing and show an increasing net income at a recent quarters. As for the free cash flow, the cash flow is very high and significantly very high, very good in the year of 2023, slightly decreased back to the 2024, and we'll be looking into it and also to explain the reason behind these results. So let's look at what this company Vita Coco actually do. So as mentioned, it's actually a beverage company that known for their coconut water. So their main product is they sell packaged coconut water as healthier alternative to sodas and other surgery drinks. So they also have other beverage that expanded into flavored coconut water, pressed coconut water, milk, juice blends, energy drinks, and functional hydration products. So basically, their clients or their target audience are health conscious consumers, athletes, and people who are looking towards a more natural hydrations. And it was one of the brand to make coconut water mainstream in US and remain one as a leader in this category. So their stream of income, their basic or their core business is selling coconut waters. They also have other wide variety range of beverages such as energy drinks. They have sustainable canned water brands and protein infused waters. And they also being located in a US, which is one of the largest market and channels through their grocery, food services, as well as e-commerce platform. So the strength and weaknesses of this company is actually that it's one of the market leader in terms of selling watered coconuts, as well as health and wellness trends alignment, as well as with strong distribution network in supermarket, convenience stores, gyms, cafe, as well as including online, including Amazon's, and diversified sourcing work with thousands of small coconut farmers across the Asia and South America, which actually resilient supply base. While for their weaknesses is that the company revenue, their core revenue is that they sell coconut water. So their business and the profit methods is very reliant on the coconut water itself, and they also have this commodity and supply risk if the price of coconuts, fried and packaging are volatile, which can impact their margins if there is more pandemics coming out and so on and so forth. They have also big competitions in this beverage field such as PepsiCo, Coca-Cola. We also have the energy drinks, Monster energy drinks, and so on. And seasonal in sales, especially high in terms of summer, whereby people are looking forward to have a better and cold drinks on the beach or at home through a very, so it can be resulting in a very fluctuation sales based on the seasonals, because no one will actually buy and drink cold coconut water during the winter, right? And let's look at why is there is a sudden decrease in terms of free cash flow from the 2023 into 2024. So the results given is that they say plunge because of substantial inventory build-up and resulting working capital strain. So this was triggered by the supply chain challenges, notably ocean freight constraints and port delays that forced the company to tie up more cash in inventory rather than turning it into operating income. So there is problem in terms of the port, the delay, as well as the ocean constraints, which makes them need to build up their inventory, putting more cash into their inventory itself, which actually restricts them to have a better margins or better profitability because of stocking up their products. So right now we'll be looking at the margins. So the profit margin, the ability of the company to profit from their selling, is actually in the increasing form, indicating their net income that earn are actually increasing and are earning more profits from what they are doing. And from the balance sheets over here, we are looking for the net cash as a very significant value of positive net cash, indicating that it has more cash than their debts, whereby their ability to pay off the situations of high debts is very safe with a lot of cash on their hands. And as for the ratios, over here we have the debt equity ratios of 0.05. So it's very good, lower than 1, lower than 0.5, which indicating have low debts in this company. As for the ROE, the company also has a ROE increasing and also higher than the 15% value. As for the ROIC, is also a similar pattern of increasing as well as staying above the 15 level of percentage. And finally, we'll be looking at their economic mode score, whereby their brand and loyalty pricing power at 8, barriers to entry at 6, high switching costs at 6, network effect at 5, and economic scale at 7. So it leads to the final total score of 6.4. So this company is also listed as a moderate, narrow to moderate mode, but based on what they are being able to provide, their predictability in terms of their profits and free cash flow is actually bringing it to become a solid narrow mode. And hopefully in the future they will be able to provide a wider mode by providing wider range of products which increase their diversifications from this company. So after looking at all those values, right, so my take on this company is that this company is actually a very high profitability company, whereby they have increasing revenue, increasing profit margin, high free cash flow, ROE, ROIC with positive value above 15%. And however, the moat is not wide, which also that the company actually achieved moderate to narrow mode of 6.4, but from the ability of the financial status itself is actually indicating that this company has a very high profitability and it may continue in the coming futures. However, it's just that it very reliant on selling coconut waters only, and the price as well as the product is seasonal based, whereby people are willing to pay during the summer, and this is where the time the company is being able to provide and earn a lot of margins from that period of time. And whereby the score of the economic mode is actually what that restricts me from entering directly into this company. Because if you compare to other large giants in terms of beverage field, such as the PepsiCo, Coca-Cola, and Monster Energy drinks, which has wide modes, which also shows a similar profile or even better profile in terms of more increasing high predictability in their financial status, I think I would be more lean towards those company with wide modes as compared to this Vita Coco with solid narrow modes, but then they have less advantage in terms of their names as well as popularity as compared to Coca-Cola, which has been a very good company and great beverage options for that 20 to 10 years already. So my take from this company is that I would actually wait and see whether or not if they will be able to improve their ability to provide a wide diversified range of product, which will change their status of narrow mode or moderate mode into wide mode company, while at the same time right now I would choose to invest in companies bigger giants such as PepsiCo, Coca-Cola, or even Monster Energy drink. So I guess that is all for today's video for about the stock review for Vita Coco Incorporations. So if you have further interest into this company, you can do your further due diligence before you make your own decisions on it. So I guess that is all for today's video. I hope this video helped, and if you like the channel, you can actually support me by subscribing, clicking a thumbs up, share this video, and I'll see you on the next stock review. Goodbye.